This is the Asia Trade. I'm Avril Hong in Singapore.
And I'm Paul Allen in Sydney. The top stories this hour. Asian stocks set for early gains after stocks and bonds rallied on Wall Street. Traders looking ahead to Friday's jobs report as they almost fully price in a Fed rate cut for September. President Trump signs an executive order sealing the tariff deal with Japan at a 15% rate, bringing huge relief to Japanese car makers. Plus, our scoop on how China's DeepSeek is working on an AI model with more advanced features to compete with US rivals.
Paul, take a look at how we are setting up for the Asia session. And as you just mentioned there, that EO, executive order signed by Trump to implement this trade agreement with Japan, essentially meaning most goods will be subject to 15% tariffs. So a sign of relief for the automakers. Essentially, this prevents stacking. We are seeing Nikkei futures pointing to very, very slight upside. We, of course, saw a bit of a recovery already in Japanese stocks just a day ago. The dollar-yen moves have been pretty range-bound of late. We'll also be tracking the Chinese Open. Don't forget, yesterday we did see reporting which suggested that China is looking to curb stock speculation. Sydney futures also pointing to upside of about 0.6% for the moment, but really all eyes will be on the jobs numbers out of the US, Paul.
Yeah, and the anticipation of those jobs numbers helped propel the S&P to a record in the Thursday session. September's meant to be a weaker month for equities, not proving to be the case at the moment. Broadcom was higher after hours as well. Third quarter earnings meeting estimates their optimistic guidance for 2026. That might provide a tailwind for some tech stocks today as well. Take a look at the oil price. Meanwhile, still pretty soft. There is, of course, an OPEC Plus meeting this weekend. We saw US crude inventories rising unexpectedly by 2.4 million barrels. Active rigs, meanwhile, in the United States are at a 4-year low as prices slump. Take a look at bond futures as well, just ticking up a little bit ahead of that payrolls report. The jobs numbers expected to show a cooling labour market. Unemployment seen ticking up to 4.3%. That'll be the highest since 2021. But the good news is that is underpinning a near certainty of a rate cut later this month, April.
Yeah, let's take a look as well at what markets are pricing or not pricing in. They aren't pricing in any more negative shocks to the labor market in the US, though expectations are for the weakest stretch of jobs growth since the pandemic. Bond markets, they've pretty much locked in that September Fed cut. Let's get a preview of the jobs report with our global economy correspondent, Ender Curran. So, Ender, we already got some of these weak jobless claims numbers. What are we expecting out of the jobs report? I mean, frozen labour market is a term that we've been seeing thrown about quite often.
Yeah, so we're expecting both an economic story tomorrow, Avril, and a political one. In terms of the numbers, expecting gains of around 75,000 jobs added in the month of August. That won't be enough to stop the unemployment rate ticking up to maybe around 4.3%. There will be a lot of scrutiny on will there be downward revisions of previous months, in particular July, of course, suggesting that perhaps, if so, the labour market's even weaker than thought. And there will be focus on scrutiny in terms of which sectors are hiring. You know, we're not seeing mass layoffs per se yet in the US economy, but we have seen a slowdown in hiring. So the focus more will be where is the strength, where is the weakness? Manufacturing, obviously politically potent. Watch out for healthcare. They've been one of the key drivers of employment in recent months, as has leisure and hospitality. So the headline is meant to be, as you mentioned earlier, the weakest jobs market growth since the pandemic, which in and of itself is expected to clear the way for the Fed to cut rates.
Yeah, that is the expectation, and although we're still hearing from some Fed speakers ahead of that meeting, some somewhat equivocal language, among them John Williams. Let's take a quick listen.
Looking ahead, if progress on our dual mandate goals continues as in my baseline forecast, I anticipate it will become appropriate to move interest rates towards a more neutral stance over time.
Well, the market's made up its mind, as you mentioned there, Andrew. Is it a near certainty, or could we see a surprise?
Well, I wouldn't say it's a certainty, but we have had strong signals, not least, of course, from the top. Chairman Powell's remarks in Jackson Hole last week, Paul, really set the tempo, and other Fed officials have followed with similar messaging that, look, it's getting close to the point where there's room to bring down interest rates. But of course, how much is a totally different debate. If tomorrow's job numbers come in weak, then you will expect a lot of heightened expectations from the economist community that the Fed will cut, but you'll also expect a lot of political pressure on the Fed to cut coming from the White House. And we had Stephen Miran, President Trump's nominee for one of the vacant FOMC governor seats today, edging closer towards nomination. And he's clearly a dove. Well, he'll be among those who will be pushing for a cut at that September meeting. And as I say, if the jobs data tomorrow is weak, then you will have President Trump certainly weighing in, making the point that the Fed, which he already says is too late, will have to cut rates as soon as possible. So as I say to you, there's an economic story here. You've got where exactly is the devil in the detail with the jobs numbers, balance that against what's happening with inflation. But of course, then you have the political backdrop, which is all about pressure to bring down rates. And that's why tomorrow's jobs number, I think, will be a pretty important one as employment figures go.
Yeah, and it's also interesting how he has been downplaying the impact on tariffs on inflation. Global economy correspondent Enda Karan for us there. Now, as we've been highlighting, President Trump's pick for the Federal Reserve's Board of Governors has pushed back against Democratic concerns that he would do Trump's bidding at the central bank. At his confirmation hearing before the Senate, Stephen Miran affirmed his commitment to Fed independence and pledged to make decisions based on his own analysis. But there were concerns about Miran's decision to keep his White House job while at the Fed.
I have received advice from counsel that what is required is an unpaid leave of absence from the Council of Economic Advisors. And so considering the term for which I'm being nominated is a little bit more than 4 months, that is what I will be taking. As long as that is the advice of counsel, I will follow the law.
Well, your independence has already been seriously compromised by your statement. You are going to be technically an employee of the President of the United States, but an independent member of the Board of the Federal Reserve? That's ridiculous.
Bloomberg has learned the U.S. Justice Department has opened a criminal investigation into whether Federal Reserve Governor Lisa Cook committed mortgage fraud. Sources say federal prosecutors have issued subpoenas seeking information related to the allegations. Last month, Trump moved to fire Cook before she sued the administration to stay on the job and maintained she never committed mortgage fraud. Paul?
Well, the S&P 500 locked in an all-time high ahead of that key jobs report. Bonds are also led higher as markets fully price in that September cut. For more, let's get to Garfield Reynolds, who leads our Markets Live Asia coverage. So, as we're discussing, Garf, markets pretty much decided that this is nailed on. But is it a case of be careful what you wish for? I mean, some Fed speakers saying inflation's not under control and maybe some cracks appearing in the jobs market.
Yeah. It is a very difficult economic setup for the Fed. They've got clear signs the labour market is weakening. They've also got clear signs that inflation is remaining sticky. So thankfully, I'm not an economist, but you can see that they have a lot to consider. As far as the market is concerned, though, what they're focusing on is what's going on with short-term interest rates, with what the Fed can control, and in a backdrop where, as I said, the labour market's under strain, but there's no panic signs as yet. Yes, we had those big revisions to job growth, revising that right down, but we're not losing jobs so far, and the anticipation for unemployment is that it's only going to grow gradually at the moment. So in that backdrop, very much what markets are looking for is a rate cut. And I think that's part of why there have been, some quarters have raised concerns about how markets seem very complacent at the idea that the Fed's independence could be undermined. Now, if the Fed's independence is undermined seriously, if it loses credibility, that can be a major issue for markets going forward, especially for the US dollar. It could potentially hurt. We've had Australia's second biggest pension fund this week saying that they're underweight treasuries because of their concerns about what's going on with US politics and policy outlooks. But that's all the longer term. In the shorter term, the question is, are you going to get the rate cuts that people are thinking the economy needs and certainly the market needs? And the answer to that is yes, we're going to get a rate cut in September, and one that looks fairly well justified on just ordinary economic grounds.
All right, Garfield Reynolds, who leads our Markets Live Asia coverage there. Just want to get you to some live pictures. President Trump is hosting a dinner with a number of tech leaders there. There you see Mark Zuckerberg at the president's right hand. Let's listen in.
Infrastructure to power the next wave of innovation. So it's, we don't often get together as the CEOs of the different companies, but it's good to see everyone.
How much are you spending, would you say, over the next few years?
Oh, gosh. I think it's probably going to be something like, I don't know, at least $600 billion through 28 in the U.S. Yeah.
It's a lot.
No, it's significant.
That's a lot. Thank you, Mark. It's great to have you.
Thank you.
Great to have you. David, you've done a wonderful job in working with the White House, a great expert. Would you like to say a few words?
Thank you, Mr. President. It's a great honor to work here at the White House and to work for you. You really care about this industry and all Americans, and I think you've done a tremendous amount already to unleash our innovators and also help build out the infrastructure of the country. And it's doing a lot, not just for tech companies, but for ordinary working Americans, the construction industry, the trades, electricians, carpenters. There's a boom happening right now in AI because of what President Trump has done in terms of stimulating investment. It's going to benefit all Americans. So it's really a thrill to be part of, and this is a really incredible group that you've assembled here. And it's like I said, it's just a great honor to have a foot in each one of these worlds and being part of it. So thank you.
Thank you very much. And Sergey, you were saying a lot in the Oval Office. I figured just somebody that likes to speak with his really wonderful MAGA girlfriend. So would you like to say a few words?
Well, babe, do you want to say something?
I truly, every time I'm here or in your presence, I'm so grateful. So thank you. It's like, I can't believe it every time, like the inauguration here. I think you're doing amazing work.
Thank you very much.
We actually were just with
Leopold. He's in Venezuela,
right.
And you're applying a lot of pressure to Maduro, and I think that's phenomenal for an American president to actually be applying pressure there in Venezuela and then hopefully in Cuba and so forth. So there's a lot of civil rights work that you're leading. We didn't get a chance to mention. I also just wanted to mention, we don't have to get into all the details talked about in the Oval Office, but I think it's a real incredible inflection point right now in AI, and the fact that your administration is supporting our companies instead of fighting with them. It's hugely important. Obviously, it's a global race, and I think we're at the cusp where these AI models are about to become profoundly useful, kind of beyond the, okay, wow, it's cool, can do that, but actually day-to-day incredible utility, incredible productivity. So very grateful for your administration support.
Well, you had a very good day yesterday. Google had a very good day yesterday. And do you want to talk about that big day you had yesterday?
Well, I'm glad it's over.
Don't forget, Biden was the one that prosecuted that lawsuit. You know that, right?
Look, it's a long process. I appreciate that your administration had a constructive dialogue, and we were able to get it to some of resolution. I would echo what Sergey said. I think the AI moment is one of the most transformative moments any of us have ever seen or will see in our lifetimes. So making sure the U.S. is at the forefront, and I think your administration is investing a lot. Already the AI action plan under your leadership, I think, is a great start, and we look forward to working together, and thanks for your leadership.
Great job you're doing. Incredible, really, job. Lisa, how about you?
Well, Mr. President, it's such an honor to be here, and the incredible work that your administration has done to support the semiconductor industry. We're building the brains behind all of the wonderful AI that's being built here, and I think the amount of acceleration that we've seen just in the few short months that the administration has been in place is really, we're so grateful for that support. And we had a wonderful event this afternoon with the First Lady's support of the AI education plan. So I think the main message is we are all in to make sure that America wins the AI race, and it's an honor to be here.
Thank you very much. Great job you're doing, too. Amazing job, what you've done in a short period of time. Really amazing. And I see somebody down there, Bill, from Microsoft that has done a pretty good job, too. I'll tell you what, I had that stock, it was 28, and now it's about 500 and something. I don't know. It's what a job you've done. Would you say a few words about your company?
Absolutely, Mr. President. Thank you so much, obviously, for bringing us all together and the policies that you have put in place for the United States to lead. And one of the things that I think has made this industry unique is not only the innovation, but it's the market access that you have obviously championed for us all over the world, and also the trust the world has on American technology. I think that everything that you're doing in terms of setting in place the platform where the rest of the world can not only use our technology but trust our technology more than any other alternative is perhaps the most important issue. And you and your policies are really helping a lot. So thank you very much. And also I wanted to thank Madam First Lady for hosting what I think is perhaps the most defining issue, which is about skilling and economic opportunity that comes with AI. And so I deeply appreciate your leadership there as well. Thank you.
Really, and a really amazing job you've done.
Thank you.
Bill, would you like to say a few words?
Sure. Well, I'm in the second phase of my career, giving away all the wonderful money that Satya's good work has helped multiply a lot. But I think the thing that ties my first career that I still spend some time on because AI is so phenomenal, and my second career is innovation, innovating in health in areas like vaccines or gene editing, and the President and I are talking about taking American innovation to the next level to cure and even eradicate some of these diseases. He mentioned polio, which is one that we're close. We don't need new science on that one. For some like HIV and sickle cell, we do need new science, but the U.S. Has the seeds that in the same way that Warp Speed took those seeds and put them together, I think something fantastic can be done. AI for our foundation is that we want a doctor for everyone in Africa through AI. We want farmers to have incredible advice and kids to have a chance to learn. So the work being done by the people at this table is changing the world. It's coming fast, so it's great. We all get together and talk about how the U.S. can lead in this key area and apply it even to the poorest outside the U.S. as well as to our great citizens. So thank you for incredible leadership, including getting this group together.
Thank you, Bill. That's very nice. Tim Cook, you've done an incredible job with Apple, little company called Apple.
Thank you, Mr. President.
Very, very few people have been able to do what you've done. Congratulations. Please.
Thank you, sir. That means a lot to me. I want to thank you for including me this evening. It's incredible to be among everyone here, particularly you and the First Lady. I've always enjoyed having dinner and interacting. I want to thank you for setting the tone such that we could make a major investment in the United States and have some key manufacturing, advanced manufacturing here. I think that says a lot about your focus and your leadership and your focus on innovation. I also want to thank you for helping American companies around the world. This is a very key thing, and I really enjoy working with your administration on those topics as well, because I think they're so important to the country. I want to thank the First Lady for focusing on education. There's nothing more important than education. It is the great equalizer and always will be. And so thank you so much for including me. We are all different in some ways, but we all believe in the power of technology to improve people's lives, and that is the thing that binds us all together.
And Tim, how much money will Apple be investing in the United States? Because I know it's a very lot, and it's, you were elsewhere, and now you're really coming home in a big way. How much money will you be investing?
$600 billion.
$600 billion, all right. It's a lot of jobs.
We're very proud to do it.
That's great. Thank you very much.
Thank you.
Appreciate it.
Thank you, sir.
Sam, you're a big leader of a very new industry at a very young age. You're a young guy. Do you want to tell us about what you're doing? You told me things before that are absolutely unbelievable. So what are you doing?
First of all, to echo the comments of Tim and others, thank you so much for getting us all together, and thank you for being such a pro-business, pro-innovation president. It's a very refreshing change. We're very excited to see what you're doing to make all of our companies and our entire country so successful. The investment that's happening here, the ability to get the power in the industry back in the United States, I think this will set us up for a long period of great success leading the world, and I don't think that would be happening now without your leadership. We're very grateful to be able to build our company here, to build data centers here, to build the entire AI industry and lead the world in the United States. Echoing many other people's comments, I think this will transform the world in a profound way, and I think it really will be to the United States' advantage to be able to lead the world this way. The event that the First Lady hosted today about education was really wonderful, and watching what AI is doing even today for education and so many other industries is really great. So thank you so much for enabling this. We will invest a ton in the United States, and we will do our best to make sure that we continue to lead here.
That's right. Thank you. Hundreds of billions of dollars, and it's going to be well worth it. Then you have an unlimited market, right?
It seems like it.
Come to think of it, how much is Google investing?
We are well north of $100 billion. In the next 2 years, it's $250 billion.
That's great. That's great. Great. We're proud of you. Very good. Thank you. A lot of jobs. Yeah, good. What about Microsoft? That's a big number.
I would say each year we are close to, in the United States, around $75 to $80 billion.
Good. Very good. Thank you very much.
Absolutely.
Would anybody like to say anything? You have a lot of geniuses on my right. Some young, some not so young. Mostly young, come to think of it. Yes, please.
I just wanted to echo everyone's comments. I think we've been just very impressed with how this administration has really embraced AI. And I think that in addition to the infrastructure, the most massive infrastructure built in history, I mean, we're talking 10x the size of the Apollo program. I think also, to me, the most important thing is what AI will do for all of us. And I think that there's been a choice of whether to approach it with optimism. And I think that that's what I've really seen from this administration. So I just wanted to say thank you for that.
Great job you're doing. Incredible job you're doing. I know every inch that you're building, and I can't believe it. They're big. The biggest buildings ever. You know, we talked about 100-story buildings. These buildings blow them away, right? So I just want to, they're more lateral than they are up and down, but they blow everything away. So congratulations. Would anybody like to say anything, please? Satya?
Mr. President.
Would you like to go, Safra?
This is a most incredible time. AI is going to change everything. You hear all of us saying that. But the fact that you are our president and you recognize this right away and you've unleashed American innovation and creativity, all the work you're doing in basically every cabinet post, in addition to what's coming out of the White House, is making it possible for America to win. Today's event that was spearheaded by our wonderful First Lady, focusing on education, is the center of where we need to go, because it is all of these young people who can't be afraid of new technologies. They literally have to embrace it and make America even stronger. And that focus was very, very critical. And I think this is the most exciting time in America ever, at least that I remember. So thank you. Thank you for everything you're doing.
Thank you very much. I appreciate saying hello to everybody, Larry and everybody else. It's an amazing company that you're involved with and running. I just want to thank everybody for being here. I want to thank the media. They've been very nice lately, although I'm still here. So we have to. They made a couple of bad predictions. That was not good. I've never had that feeling before. I went to an event and people are coming up to me and saying, "You're still here." I said, "What do they mean by that? I didn't hear about this." But anyway, I do. The press has been great in terms of this industry, and they understand the importance of it. This is taking our country to a new level. We're leading the world. We're leading China, but we're leading the world by a lot, and we're leading it because of the people around the table. And all I can do is implement and make it a lot easier for you, and I'll be doing that 100%. So I just want to thank you all. Yes, did you have a question? Go ahead. Go ahead, please.
Thank you, Mr. President. Tomorrow we have a jobs report coming out, the first since the BLS commissioner who you fired won't be there. A lot of people will be turning to you to see if you believe the data that's released. Can you commit to saying the data will be credible?
The number, I don't know, they come out tomorrow, but the real numbers that I'm talking about are going to be whatever it is, but will be in a year from now when these monstrous, huge, beautiful places, they're palaces of genius, and when they start opening up, you're seeing, I think you'll see job numbers that are going to be absolutely incredible. Right now it's a lot of construction numbers, but you're going to see job numbers like our country has never seen before. Thank you very much.
Thank you, Mr. President. I have two questions for you. First, after your phone call with Ukrainian President Zelensky today, do you plan to speak with Russia's President Putin in the near future?
What?
If you will speak with President Putin in the near future.
I will be, yeah, I will be. We're having a very good dialogue. I settled 7 wars. The one that I thought would be maybe one of the easiest. You know that feeling? You think one thing is going to be easier, turns out to be a little bit tougher, but the one that I thought would be an easier one because of my relationship with President Putin and with Ukraine and everything else, I thought it would be the Russia-Ukraine disaster, where this week 7,014 people were killed, soldiers, in most cases soldiers, a few from Kiev, relatively few, but mostly soldiers, and they're being killed at levels that we haven't seen since World War II. And they're not American. They're not from any of the countries that some of you are from, but they're people, they're souls, and we'll get it done. But that's turned out to be the most difficult of the group. You know, I settled 3 wars. One was 31 years going. A lot of people killed, 10 million people. Another was 34, and another was 37 years it was going on. And people said, you can't settle them, and I settled them. This one turned out to be more difficult, but we'll get it. We're going to get it settled.
Mr. President, Senator Bill Cassidy said effectively we're denying people vaccines. Do you have full confidence in what RFK Jr. is doing?
Well, I didn't get to watch the hearings today, but he's a very good person. And he means very well, and he's got some little different ideas. I guarantee a lot of the people at this table like RFK Jr., and I do. But he's got a different take, and we want to listen to all of those takes. But I heard he did very well today. But it's not your standard. It's not your standard talk, I would say, and that has to do with medical and vaccines. But if you look at what's going on in the world with health, and look at this country also with regard to health, I like the fact that he's different. Okay.
Can you give us your latest thinking on semiconductor tariffs, sir, which you're considering imposing? And have you discussed that with any of the leaders?
Yeah, I have. I've discussed it with the people here, chips and semiconductors, and we'll be putting tariffs on companies that aren't coming in. We'll be putting a tariff very shortly. You probably are hearing we'll be putting a fairly substantial tariff on, not that high, but fairly substantial tariff, with the understanding that if they come into the country, if they're coming in, planning to come in, there will not be a tariff.
So it doesn't.
If they're not coming in, there's a tariff, fairly substantial tariff. Well, I don't know if they're building here, and for the most part, I think they're building here. That's probably why they're here for the. But like I would say, Tim Cook would be in pretty good shape. No, please, in the back.
Are you urging or encouraging any candidates in the New York City mayor's race to drop out to clear the field?
No, I don't like to see a communist become mayor, I will tell you that. And I don't think you can win unless you have one-on-one, because somehow he's gotten a little bit of a lead. I have no idea how that happened, but I'd prefer not to have a communist mayor of New York City. And, you know, that's what he is based on his policy, if you look at his statements in the past. So I would like to see 2 people drop out and have it be one-on-one. And I think that's a race that could be won. Yeah.
Mr. President, you'll be heading to the UK in a few weeks. Yesterday, Nigel Farage was on Capitol Hill. He really was talking a lot about pushing back on censorship online. He was asking politicians like yourself, some of the people in this room, to really push back on that. How concerning is that to you? And Mr. Zuckerberg, if you don't mind answering, how concerning is that to you, the lack of freedom of speech online in the UK?
You didn't think you'd get that question. He's looking at me saying, how the hell? He's saying, how did I get that question? If you'd like to answer, free speech.
Sorry, actually I wasn't paying attention. But
there seems to be a crackdown. The British government seems to be cracking down on social media posts, people being arrested for tweets, social posts. Just wondering how concerning that is to you, Mr. President, and Mr. Zuckerberg.
This is the beginning of your political career.
No, it's not.
I will just say that in terms of UK, strange things are happening over there. They are cracking down, and surprisingly so. And I've spoken to the Prime Minister, and let's see what happens. But it is a little bit different situation. I'm very surprised to see what's happening in. Are you talking about the UK in particular, right? Yeah, I'm very surprised to see what's happening. Sad. It's not a good thing. Yeah, please.
Mr. President, thank you. America is first in artificial intelligence, but what are your concerns in the alliance of axis of evil, China, Russia, and North Korea towards artificial intelligence, but also as military, sir?
Well, I have no concerns. We have the most brilliant people at this table, and nobody's close. And I spoke to world leaders, and they admit privately, but they admit the biggest. They admit we have the smartest people, we have the greatest technology. They can copy, but they can't create like we can create. We have the smartest people in the world right at this table. So thank you for the question. Thank you very much, everybody. Thank you. Thank you very much.
What's your reaction on Florida changing its vaccine?
I'll comment on that later. Thank you very much.
Mr. Gates, what do you think of the change?
Hearing there from the U.S. president hosting tech executives at the White House. And of course, we've been hearing that mutual praise being lapped upon each other from these tech executives. They're also talking about how Trump has provided a lot of support for the AI sector. China never far from their minds. Trump said that the U.S. is leading China by a lot in that regard. We also heard how the BLS data, when asked a question, the U.S. president said that the real numbers will be in a year from now. Let's bring in Bloomberg White House reporter Laura Dezensky. Lauren, we're hearing a very positive tone from everybody at the table, and it's mutual from Trump towards the tech executives as well. What was your key takeaway from all this?
Yeah, this is such a classic Trump event. It's an opportunity for CEOs, American bred, these are classic American companies. It's a chance for Trump to get all of them in a room in front of cameras and have them talk about how great Trump is and how significant their investments are. And it goes both ways, too. Trump is saying that, he's very proud of Google. He's seated next to Meta's Mark Zuckerberg. It's really just, it almost kind of reminds me of The Apprentice a little bit, where it's all of these people who are working for and on behalf of Trump and investing in the U.S. And, Trump also has the opportunity to give them a little bit of red meat and a little bit of something that these CEOs are looking for as well. Proximity to the president helps and is a good thing for these CEOs. When you're on the president's good side, he's much less likely to tank your stock with some errant Truth Social post. We had him discussing the significant investments from these companies and really praising these CEOs in very personal terms. Again, saying that he's proud of someone, that's not very formal speech. And again, it just goes back to being such classic Trump. It's also worth noting that he talked about chips tariffs. Our man in the room, Josh Wingrove, asked, what's happening next with tariffs on semiconductors and chips, and obviously the industry is really waiting for any details there. We didn't get a whole lot necessarily. Essentially, the president is saying that it will be fairly substantial, but not that high. So it's up to insiders to figure out what exactly that means. But it's a little bit of reiteration as well. It's Trump saying that if these industries or if these companies plan to come here, they won't be subject to the tariff. If they're building here, if they plan to build, no tariff. He also mentioned that Tim Cook will be in pretty good shape, which is classic Trump in that, what does that mean? The specifics are obviously a little unclear, and we'll have to see what happens there. And I know our Bloomberg reporters will be all over the next steps.
Lauren, what are we to make of the setting as well? Because there's no accidents in any of this. The reception was supposed to take place in the Rose Garden and then was moved inside. What's the logic behind this?
Yes, it's a shame that Washington's inclement weather rained on the president's parade, or at least this event. It was supposed to be in the Rose Garden, which, as we all know, the president has renovated. The president has really tried to put his own personal touch on the White House. He's erected 2 flagpoles. He's installed some gold in the Oval Office, and he's also paved over the Rose Garden. His thinking being that there's so many events there, it's very hard to have people walking all over grass all of the time. And so he paved it over, put up some tables and some umbrellas, and it would have honestly been pretty helpful to have an event outside. Unfortunately, the weather did not cooperate, so we then had to have this event indoors, which certainly looked lovely, but is not as lovely as an afternoon in Washington spent outside.
All right, Bloomberg White House reporter Lauren Dzensky there. Let's take a look at how commodities are tracking in the meantime. We have seen a little bit of softness in the oil price, backing off a bit more. We did see U.S. crude inventories coming a little bit higher than expected. We've also seen active rigs in the United States hitting a 4-year low as those prices start to soften. Iron ore still holding on pretty strong at 104.65, and the gold price still hovering near record highs against the backdrop of likely Fed easing and uncertainty over Fed independence as well. But let's get back a little bit to the outlook for oil markets. We're joined now by Scott Darling, Managing Director at Haitong International Securities, joining us now. Scott, thanks so much for your time today. I do want to start with that oil price. We've got an OPEC Plus meeting, of course, this weekend. Are you anticipating any change to the supply picture?
No, I mean, OPEC plus oil policy will continue, we believe, until next year. So they'll keep raising oil output. OPEC really, over the last few years, wants to take back market share, particularly from the US, and that policy will continue. And that's why we have a $65 Brent forecast for next year and $55 for 2027.
So what does that say about your outlook for the demand side in 2026? Do you see that picking up?
Not really. I think, economic growth will moderate or at least remain around the levels we've seen over the last few years, and therefore oil demand growth will be around sort of 1% each year. And I don't think that the demand picture changes. What we're seeing at the moment, and this is why oil has been weak, is because of the supply side. You've had at least 3 or 4 years of oil service companies having a lot of activity, and this is now translating into higher supply as we go into next year.
We do have the likes of Goldman flagging that $50 a barrel next year is a possibility, though. I mean, what would we have to see for a scenario like this to come to pass?
I think we're seeing already more supply. Haitong have a $55 Brent view in 2027. More moderation in terms of global oil demand growth, and more supply ultimately mean lower prices. Also, OPEC plus policy continuing as it's doing, adding 500,000 barrels per day each month, will continue to see price weakness.
Talk to us here about the nuances with OPEC this weekend and into future decisions about what it should versus what it will do.
I think the policy you've seen for the last few months will continue for the rest of this year into next year, i.e., increasing supply gradually, allowing other OPEC members to increase their output. I think that trend just continues into next year.
What does this mean for US shale drillers as well? Because when you've got a weak oil price, it's obviously going to have an impact here. I mean, President Trump making a big deal about US independence, US oil exports, but at the same time, we've got active rigs in the US pretty low right now. What's your outlook?
Look, in the long term, I don't think the cost curve for oil has changed. So our long-run oil view is $60 to $65 based on projects which will give me a 12% IRR. I don't think the cost curve has changed. Therefore, as long as oil is around these types of levels, it still incentivizes investment.
We've spent a lot of time talking about oil today, but before we let you go, Scott, got to mention the gold price hovering around those record highs. And, Averill mentioned Goldman's call for oil. There's a pretty bullish one for gold as well with a $4,000 handle. How much higher do you see gold going?
Look, I think gold does move higher into next year. You've got a lot more geopolitical risks. So where we're seeing gold levels, yes, they probably can go higher into next year.
Scott, really good to get your insights. Thanks so much. Scott Darling is Managing Director at Haitong International Securities. And of course, we were just talking about earlier about the US president hosting tech executives at the White House. And you're looking at these live pictures from Washington. More ahead on the Asia trade. This is Bloomberg.
We are watching Japanese automakers at the open after President Trump signed an executive order implementing his trade agreement with Japan, and that means a maximum 15% tariff on most of its products, and that includes automobiles and parts. Now, Trump's directive prevents the stacking of Trump's country-specific duties on top of existing levies. For more on this, we're joined by Bloomberg reporter Yoshiaki Nohara in Tokyo. So, Yoshiaki, is this a big win for Japan?
Well, it's a good question. I would say it's a big relief for Japan because they've known that this will come. But the question has been that whether they're going to get soon or it's going to be dragged down for a long time. But it came earlier than expected, so it must have been a big relief for Japanese officials and Japanese automakers.
Yoshiaki, what's next for this implementation of the trade agreement?
So I did check the executive order that specified when these tariffs are coming down, but there was nothing new in terms of the $550 billion investment mechanism that they said they will create as part of the trade deal. So what's next is that how much detail are we going to see about this investment mechanism in terms of when it's going to actually officially going to start with real investment money being flowing into the U.S. from Japan. So that's a big question still to be answered at this point.
You mentioned that if not a big win, certainly this is a big relief for Japan. Must also be a big relief for Japanese Prime Minister Shigeru Ishiba. Is this going to help his political fortunes at all?
Well, yes and no. Yes, that he will be able to say that he's doing a good job of making sure that this deal is going to be implemented. But no, in terms of the uncertainty of the investment vehicle that I mentioned. So he can arguably say that this is still an ongoing process and still more work ahead to make sure that everything is going to be as planned, as agreed in the trade deal. So, at the same time, he also cited other, urgent issues such as inflation that he needs to tackle for the public, so that he can use that as a reason still why he needs to stay on. But of course, the key topic, a key event is the next Monday when the ruling party is going to decide whether to bring forward the leadership contest.
There's also a defence 2+2 meeting happening between Japan and Australia today. What are we expecting out of that?
Well, so the two nations have enough reasons to get closer for security ties because they're also both of them are facing the similar pressure from the United States to spend more for defense. So it makes sense in terms of these closer security ties and collaboration because they are facing the similar challenge, the geopolitical tensions dealing with China. So it makes sense that they will say that they will do more together on the security front. So we're expecting some kind of reiteration of that, mutual engagement in security ties, and also probably the celebration of the recent announcement of the Australia deciding to buy our warships from Japan, which was a really big moment for the Japan's security and also defense industry here.
Yoshiaki, thanks so much for running us through all things Japan, from security to tariffs to domestic politics as well. Bloomberg reporter Yoshiaki Nohara for us there. We also got data about 17 minutes ago out of Japan, which show labor cash earnings coming in at 4.1% for the month of July. This is, of course, the on-year figure. This is higher than the 3% of the median estimate, but also this is an acceleration from the prior reading of 2.5%. We also got household spending data, that number coming in at 1.4% on year for the month of July. Again, this is something that is a bit lower, quite a bit lower actually, than the median estimate. And of course, out of Japan this week, we've been getting the 10-year, 30-year debt auction. And the 30-year, just a day ago, also added to the sense of respite for global bond markets, with demand broadly in line with the 12-month average. Let's bring in our senior FX and rates reporter, Ruth Carson. So, Ruth, we're seeing respite. Do you think this will last?
It's a great question, and it's certainly one that's on the mind of every single bond trader out there, not just in Japan, but I'm sure in New York, Singapore, and Sydney, and everywhere else. Now, it is also a multi-trillion-dollar question, because we have to remember that despite the relief that we're seeing, it's not over yet. We've got 20-year auctions coming up, 40-year later this month as well, and that is ultra-long. Those are incredibly long-dated bonds that a market can find hard to digest. Now, the relief that we've seen this week actually comes amid a very volatile week as well. People are positioning for NFP coming up in the US. So there's a sense of almost people waiting for signals. Will the Fed cut? Will the Fed not cut? And that in itself is also causing people to go, you know what, let's not go all out and short JGBs or ACGBs or gilts right now. Let's wait and see. And I think we're seeing that in the demand that we saw yesterday with the 30-year auction as well.
Then does this raise the question, are markets being complacent?
Well, I think it's more about keeping their ammo dry. So if you put all your eggs in one basket, it could backfire quite quickly as well, especially if we see a sudden drop in yields or a sudden spike up in yields as well. Remember that traders are already pricing in a full Fed cut. And yeah, we'll just have to see what happens with tonight. And I think it's game on next week.
Ruth, still got a very weak yen, back below 148. Where's the path of least resistance here?
So, and again, this is something that is definitely weighing on traders' minds as well. If you look at the FXFC function, which looks at currency forecasts on the Bloomberg terminal, you find that the average forecast of the dollar yen is 140 for the first quarter. Now, that's a fair way from where we are at the moment. We've seen a very big range of trading this year. The yen is very much beholden in a way to sentiment abroad. Yes, JGB auctions and bond yields absolutely matter in terms of its influence on the currency. But remember, all it needs is for rate differentials to close with the US, and you could see some yen strength. Haven bids and haven flows, that would also drive yen strength. But all in all, there's sentiment in the market that the yen remains cheap. But it would be a very brave soul indeed to go out there to buy the yen fully.
Does the turbulent political backdrop and likely tightening from the BOJ factor into the calculus for the forward path for the yen?
Absolutely. You cannot discount that at all. We've seen that, and I remember that the yen is the third most traded currency in the world in a $7.5 trillion market. So absolutely, it's the easiest asset to trade. And if there's even a whiff of whether it's a scandal or just negative sentiment about leadership changes or indeed the BOJ's changes to the BOJ's hiking path, absolutely, it will influence the yen, and we could see it drop even more if investors are just saying, I've had enough.
For the moment, though, we're seeing the yen firming a little bit after those labor market numbers that showed cash earnings at 4.1%, so kind of cementing the odds potentially of a BOJ rate high. Ruth, great to get your insights. Thanks so much, Ruth Carson, senior FX and rates reporter for us. More ahead on the Asia trade. This is Bloomberg.
Let's get the latest from the corporate front. Broadcom shares rising after the bell after its CEO promises big improvements for the firm's AI outlook next year. Hock Tan told investors a major new customer has placed production orders for custom AI accelerators, a market led by Nvidia. Broadcom now expects AI chip revenue to hit $6.2 billion in the last quarter, which is above forecasts. China's DeepSeek is said to be developing a new model with advanced AI agent features to compete with US rivals such as OpenAI. Sources say the model can execute multi-step tasks with minimal prompts and learn from actions. They also say founder Liang Wenfeng is pushing for a fourth quarter unveil as the industry awaits a successor to R1, which rattled rivals earlier this year. Averill.
Yeah, Paul, we'll be watching some of these stocks when trade opens in Korea and Japan shortly. We're watching Korean tech names, SK Hynix and Samsung. Electronics, tech stocks in general are about to get fresh fuel from Broadcom's upbeat forecast. There's two other developments on these Korean names in particular. We're watching the fallout from SK Hynix after it got this approval on an agreement to pay about $2.7 billion in bonuses to quell labor tensions. Samsung, meantime, also launched these cheaper S25 phone models and updated its tablets, Paul.
All right, we are just about 30 seconds away, or, well, no, beg your pardon, 4.5 minutes away from the open. We're going to be watching Japanese automakers, of course, this after President Trump signed an executive order implementing his trade agreement with Japan. So that means a maximum 15% tariff on most of its products, including automobiles and parts. And Trump's directive also prevents the so-called stacking of country-specific duties on top of existing levels. Market opens in Sydney, Seoul and Tokyo next. This is Bloomberg. This is the Asia Trade. We are counting down to Asia's major market opens.
Yeah, Paul, and a couple of things we're watching, of course, in the session in the lead up to that U.S. jobs report. Also, these developments between the U.S. and Japan on trade, with Trump having signed this executive order to implement their trade agreement.
Yeah, it's going to be interesting to watch the fortunes of Japanese automakers this morning. That ruling, no doubt, coming as a huge relief. No tariff stacking, 15% cap. So that's some positive news for Japan's car sector, Averill.
Yeah, and we also got data out of Japan showing wage gains, right? Really strong and seem to back the case for that BOJ rate hike. Wage gains by the most in 7 months. We already saw a bit of firmness trickling into the Japanese yen following the data. It's reversing some of those gains at the moment. But look at how stocks are faring. Perhaps that relief is playing out in Japanese stocks at the moment. As you say, we'll be keeping tabs on those automakers. This is following on, of course, from yesterday where the gauges already recovered fair bit from Wednesday's declines. Looking at the 10 years in Japan, holding out at 158 is the yields there. Take a look as well at South Korea markets, because we did get those Broadcom numbers and the upbeat forecast. Maybe fresh fuel for tech stocks overall, but a couple of names in South Korea we're watching as well, including Samsung Electronics. They did unveil a cheaper phone. We had SK Hynix also. Looks like they will dish out these bonuses in a landmark sort of move. So those are among the counters we are watching. Looking at dollar Korea won, looking quite range bound at the 13.93 level, Paul.
We've just opened for trade here in Australia, seeing a reasonable amount of optimism in the Aussie index. We're up by about 0.5% at the moment. One stock doing particularly well right now. Macquarie Group, better by 1.2%. This is on the news this morning that it's agreed to buy a 40% stake in the Portuguese hospital operator Saud. Not sure if I pronounced that correctly, but it's a €310 million deal. So Macquarie stocks popping higher this morning in the early going. Aussie dollar mostly unchanged, just a shade above 65 cents, but we are keeping an eye on yields, of course. The 10-year yield backing off a little, 4.1530 at the moment. It is, of course, a crucial day in the US. We will get jobs data Friday, the payrolls report out that's expected to show a modest gain, a cooling labour market. Unemployment seen ticking up to 4.3%. The market's decided, well, easing in September pretty much a lock. We've heard from the Fed's John Williams, though. Let's have a listen.
Looking ahead, if progress on our dual mandate goals continues as in my baseline forecast, I anticipate it will become appropriate to move interest rates towards a more neutral stance over time.
Now, aside from hearing from some of these Fed officials, we've also been hearing from the Japanese trade negotiator, Akazawa, that he passed a letter from Prime Minister Ishiba via Howard Lutnick, of course, the Communist leader, to the U.S. president. So we're watching for some of these developments on the U.S.-Japan trade front. Of course, Akazawa is in the U.S. for those trade talks. Let's bring in David Chao, global market strategist at Invesco. Good to see you, David. So we're seeing maybe some incremental positive news on Japan. How much of that do you think is already priced in by markets?
Well, I think that we continue to be in an environment where there are lots of developments for trade, for geopolitics. If you look at some of the trade tariff-related indexes, the uncertainty level still remains high. So I think that even if we have some positive developments here with Japan, it could very much be punctuated in a few days with some perhaps negative developments for tariffs. Remember, we still haven't had the sector-related tariffs to things like pharmaceuticals, semiconductors, that are likely to come down the pike. So when all is said and done, there still is a bit of uncertainty when it comes to trade and tariff developments. But I think Japanese markets, there's still some upwards trajectory. We really like the Japanese yen. We think that maybe a rate hike could come sooner rather than later. And this is certainly going to be a boost for the Japanese yen. We think it'll be the best performing currency in the next 12 months.
You talk about the uncertainty. We did get Trump, though, signing the executive order to implement that trade agreement with Japan. We're hearing from the trade negotiator in Japan himself saying that they welcome this executive order as a firm implementation of the deal. Also seeing in market reaction, Toyota shares rising about 3% after Trump signed this order on the tariff deal. How do you position, as you say, amid this uncertainty?
Well, I think that Asian economies have done much better when it comes to tariff negotiations with the U.S., especially Northeast Asian countries compared to, say, Southeast Asian countries. Now, overall, the APAC region, I think the risks related to tariffs so far have been more mitigated than originally anticipated in the April kind of Liberation Day. So I like the APAC market more than other places like Europe or the U.S. I think growth is starting to firm up a bit. PMIs from China to other parts in Asia have started to turn up. That's a positive leading indicator. Asian central banks are likely to cut rates more and more quickly than the Fed. And so I think that there are more positive catalysts for Asian markets for the remainder of the year.
I do want to get your view on the Fed as well, because we've got the S&P at a record on expectations that we're going to see some easing this month. But are you at all concerned about these questions around Fed independence? The market's not really reacting to that at the moment. What are your thoughts?
That's right. I agree that we're going to get a cut in September from the Fed. And I also think that markets are underpricing the risk of the Fed independence or the lack thereof. And it is quite worrying, I think, especially since the Fed has been an independent institution being able to think and govern and weigh growth and inflation risks. And so I think that investors should be watching this very closely. We have a court case going through right now with Fed official Lisa Cook. And so I will be watching very closely and how that plays out.
You were mentioning you're quite upbeat on Asia-Pacific stocks, Japan as well particularly. But how about China? Because we've seen some very strong buying of Chinese equities and indeed record borrowing to fuel some of these purchases, to the point that regulators are now considering curbs. How sustainable does the rally in China look to you?
Well, I think that the momentum that we've recently seen in China has very much been driven by domestic buyers. We haven't really seen foreign capital flow back into China. And there's certainly lots of interest. Many of the clients that we speak to in Europe and South America, and even in the U.S. are starting to look at Chinese equities and Chinese markets. The liquidity that we've seen boost Chinese equities has really been through monetary easing and cuts to interest rates in China over the past 6 months, and that's starting to take a greater effect. Also, lower interest rates in China have also bolstered Chinese retail investors to look at higher yielding investments, and we're seeing that flow into Chinese markets. But overall, I think that the momentum can be sustained because Chinese equity valuations, while they're above perhaps historical levels, I don't think that they're trading at any kind of worrying or expensive valuation levels.
What about valuations for the U.S.? I mean, you touched on some of this earlier. Given how concentrated it all is in tech, how much of a risk is there that we see a pullback?
Well, September has historically been the worst month for U.S. stocks because of trading illiquidity and also lack of catalysts. So I do want to caution investors as we head into the rest of this month that there could be market volatility more than usual. And if that happens, I think it could be a buying opportunity, especially if the sell-off is unexpected. But in general, I like to be a little more defensively positioned now for U.S. stocks. Defensive stocks are trading at a much more palatable valuation level. Healthcare, utilities, consumer staple stocks. These are more attractive than I think the growth in tech stocks that have really surged recently.
I wonder if you could weigh in also on what's expected from the jobs report, because we have seen recently that among the sectors that have supported the labor market, the acyclical parts, that seems to potentially be cooling off or easing off a little. Is that a concern for you when you look at the broader picture in the U.S.?
I am concerned about the labor market in the U.S. It seems like we've had a slowdown, a cool down over the past few months. And even for the entire year, the revised estimates for the jobs number has always been lower than what was reported. And so as we look at the upcoming jobs report, I don't think that it will surpass expectations. And that's why I think that the Fed is likely to lower rates because the labor market is starting to show cracks.
All right, David, thanks for coming in. Nice to see you. David Chao, Global Market Strategist at Invesco. Let's take a look at how these Japanese automakers are faring, because as we've been highlighting, that 15% tariff kind of locked in, preventing stacking, removes a bit of the uncertainty and pain out of the way for the automakers. You're seeing that surge quite clearly there, with Nissan for the moment leading the charge. Toyota, though, did climb as much as 3.3% earlier on, Paul.
Let's take a look at how some of those big tech names are faring in Korea and elsewhere. We've got SK Hynix better by 2.6% at the moment. A couple of catalysts in the chip space today. We did hear from President Trump a little bit earlier saying we'll be putting a tariff on very shortly, a fairly substantial tariff. That is for companies that do not bring chip and semiconductor manufacturing to the US. But if they're coming in, there won't be a tariff. Also, we heard from Broadcom, third quarter earnings result. Those numbers coming in line with estimates, but the market really liking the forecast for the fourth quarter. Broadcom signaling that an unnamed new customer will be placing substantial orders. So we're seeing a bit of optimism around the chip space in Asia this morning. We have more ahead on the Asia trade. This is Bloomberg.
We're tracking Japanese assets. We did get wage growth data, and it looked really strong, so cementing these bets of the BOJ's rate hike path. But on the other side, and potentially providing a bit of a tailwind to these JGBs that you're seeing ticking up very slightly, is Trump having signed the executive order with Japan to implement their trade agreement that has provided relief to these auto stocks that are boosting the benchmark in Japan. We're seeing the yen still looking pretty range-bound against the greenback. Now, Trump having signed this executive order implementing his trade agreement with Japan includes a maximum 15% tariff on most Japanese products, including automobiles and parts. Let's bring in Bloomberg News Desk editor Balazs Pence. So, Balazs, looking at this EO, markets are cheering it on. What do we know about how the trade agreement is going to be implemented?
Yes, good morning, Gabriel. Japan has been a bit of a model student when it came to these trade negotiations. They were one of the first countries to strike a deal. They got one of the most favorable tariff rates, and they were the country that pioneered this whole framework where the deals include a large investment agreement. So what this does now is it solidifies the implementation of that deal, which is something that Japan has been pushing for ever since that initial agreement came together back in July. And crucially, it prevents the stacking of those tariffs. If you remember back a few months ago, there was a little bit of sort of parallel talk between the U.S. and Japan about whether those tariffs might be stacked or might not be stacked. They won't be stacked. So that's a huge relief for especially the Japanese automotive industry. So we now know that the implementation can start in a few days and that it will apply to those very, very crucial companies. Some questions still remain, especially around that investment pledge, but this is certainly good news for Japanese equities.
Well, Japan's top trade negotiator, Roshi Akazawa, is in the U.S. at the moment as well. Is there still some work to be done here? Is there potential for further announcements?
Yes, Akazawa had some very high-profile meetings. He met with Secretary Lutnick. He met with President Trump yesterday, and it does seem like his presence in D.C. helped push along this agreement. But the big question is how that $550 billion investment pledge is going to work. There was a lot of disagreement between the two sides about what that might entail. There seems to be a lot of questions about what form that investment might take, who will be in charge of it, what will happen with the proceeds. So there's some work still to be done, but certainly Japan is ahead of a lot of other countries when it comes to their trade agreement.
We're also hearing how Akazawa says these tariffs damage Japan's domestic industries. What would you say, can we count this as a sort of good outcome already for Japan at the moment?
Well, define good, right? Tariffs are not a great thing for any exporting country like Japan is, and certainly whenever you have to contend with those tariffs, those higher input costs, that makes it more difficult for them to compete in a very important market like the U.S. On the other hand, we do see that Japan was able to achieve a lot more favorable terms than a lot of other countries, a lot of their competitors, especially thinking about countries like India, like Brazil, like South Africa. There are a lot of countries around the world which have to contend with much higher tariffs. So it might be a bit of a win, but certainly whenever there are tariffs imposed on a large exporting nation, that will be difficult for the economy.
All right, Bloomberg News Desk editor Balaj Pans there. The top global headlines that we're following this morning. Chinese President Xi Jinping pledged deeper ties with North Korea during his first bilateral meeting with Kim Jong-un in 6 years. According to state media, Xi stated that Beijing was willing to strengthen high-level exchanges with Pyongyang. The meeting came after the Chinese leader hosted both Kim and Russia's Vladimir Putin in a vast military parade this week. Sources say President Trump will rename the Department of Defense to the Department of War. It's a moniker that's not been used since the 1940s. Trump is expected to sign an executive order on this on Friday. The changes include renaming the Pentagon's briefing room to the Pentagon War Annex and modifying the department's website and signage. European leaders are pledging to provide security guarantees for Ukraine if a ceasefire takes hold. France says 26 countries are ready to contribute to guarantees, including troops. President Emmanuel Macron says US support for the measures will be finalized in the coming days, although the White House didn't comment. Avril.
Let's take a look at how Europe futures are faring. Of course, they advanced following these Fed rate cut bets, and you're looking at futures pointing to further upside. We are watching as well French bonds as investors back them in an auction ahead of that confidence vote. German 10-year bond futures also seeing that upside. We'll have more ahead on the Asia trade. This is Bloomberg.
Making it very easy for you in terms of electric capacity and getting it for you, getting your permits. We're leading China by a lot, by a great amount.
President Trump there speaking at a White House dinner alongside US tech CEOs. Let's get some more on this with Bloomberg's tech correspondent Annabelle Drulers. Belle, the air in the room pretty heavy with mutual appreciation and congratulation as well. And Trump issuing a bit of a warning, though, for chip companies that don't want to set up in the US. What's coming?
Yeah, I think you've really hit the nail on the head there. I mean, it was congratulations really going in both directions. But just to sort of set the scene, so you just saw there that dinner and who was there really there in the room, because it was just the heavyweights of the tech industry. I mean, you can see Mark Zuckerberg there, for instance, sitting next to President Trump, but there was Tim Cook sitting opposite, Bill Gates you can see there, Satya Nadella, Sam Altman with his back to us here, Lisa Su from AMD, there was Oracle as well, Alphabet was in attendance. I mean, it was a really long list. And the reason they were there was actually for an afternoon event with Melania Trump. She was focusing on AI in education, so really with students, with teachers as well. But during the dinner, which was open to the press, we did get also some messages. You mentioned around semiconductors, and that was probably one of the key takeaways. President Trump said that the US is ahead of China, but he also had that warning shot that if companies aren't already in the US, or if they aren't looking to bring some manufacturing to the US, they will face tariffs on semiconductors.
Yeah, Belle, you talk about how Trump said they're ahead of China by a lot. We are seeing in terms of rivalry, it's also about AI, and DeepSeek seems to be making some headway for something that's going to be launched towards the end of the year, or by the end of this year, that could rival OpenAI in a Bloomberg scoop. What do we know so far?
Yeah, that's right, Avril. So exactly. I mean, it's not just OpenAI. There's a broader movement that we see toward what's called agentic AI now. So agentic AI is sort of moving beyond the simple chatbots. So something like ChatGPT, for instance, you put in the text prompt, it spits out an answer. That's sort of human-led. Agentic AI is about moving into the next phase, where it's really the AI model that has some autonomous capabilities. So you can ask it to do things like plan my vacation, or to write this software code, but also do the debugging of that software code. I mean, it can really do a range of different tasks. And so DeepSeek is said to be now getting into this race with an agentic AI model. There's not too much we know around this, but we do know that the expectation is that they want to have it out by the end of the year. And it is quite a stiff race here because there's Anthropic, for instance, Microsoft, they've launched their own AI agents in recent months. And it really is a signal that the CEO and founder of DeepSeek, that's Liang Wenfeng, does want to stay ahead of the competition.
Yeah, and the industry is still waiting on that note for a successor to DeepSeek's first reasoning model. What's being planned for a follow-up?
Yeah, exactly. I mean, R1 was released back in January, and R1 is really what sent the shockwaves through the entire global tech industry around what it could achieve. But since then, we haven't really seen any major updates. It's sort of just been incremental, minor upgrades from the company. So that really just stands apart, not just from the industry in the US, but also in China, where you have the likes of Tencent, Alibaba, that are just putting out continual product releases, product upgrades as well. Why we haven't got this R2, the second reasoning model from DeepSeek, just yet is unclear. I mean, there's been a few different theories that have been posited. There's firstly the CEO and founder Liang, that he just wants to get it right. There's also some questions, maybe they've had various glitches in training or development around their access to chips, for instance. But again, and just to link it back to that agentic AI story, it's really unclear. They've got the R2 that we're expecting to come. We've got the agentic AI model to come as well. Which one is going to be the bigger breakthrough for the tech industry, or will it be as well have that same success and hype that we saw for R1?
Good stuff, Belle. Thanks for breaking it all down for us. Bloomberg's tech correspondent Annabelle Drawlers for us. Other top headlines we're tracking in tech. The Financial Times is reporting Anthropic will stop selling AI services to groups majority owned by Chinese entities, including ByteDance, Tencent, and Alibaba. The report says it's because Anthropic is trying to prevent Chinese tech from benefiting its military and intelligence services. Sources told the FT that the policy will take effect immediately. OpenAI has announced plans to launch a new AI-powered jobs platform next year to help match employers with candidates who have AI skills. The company will introduce a certification program to teach workers how to better use AI on the job, with a goal of certifying Americans by 2030. It also plans to use AI to help match local governments and companies of all sizes with potential candidates. Broadcom shares rising after the bell after its CEO promises big improvements for the firm's AI outlook next year. Hock Tan told investors a major new customer has placed production orders for custom AI accelerators, a market led by Nvidia. Broadcom now expects AI chip revenue to hit $6.2 billion in the last quarter, above forecast. We'll have more ahead on the Asia trade. This is Bloomberg.
Let's take a look at our Asia markets are tracking 30 minutes into trade this Friday. Modestly risk on across all those major indexes. The Nikkei leading the way, better by 1.3%. Plenty of reasons to be optimistic too. We had a breakthrough on Trump tariffs on Japan automakers, a deal with a 15% rate that'll kick in 7 days. There's going to be no tariff stacking either. So Japanese automakers moving ahead quite strongly. Tech also doing well. We did, of course, have President Trump warning of tariffs for chip companies that don't set up business in the US, but those that do are going to be very well rewarded. Broadcom also out with good third quarter results and a promising outlook for the fourth quarter as well. Underpinning all of that, a record for US stocks ahead of Friday's payrolls report. The Fed easing considered pretty much a lock. So all of those factors pushing stocks higher this morning, Avril.
Yeah, and against this, I think, backdrop of concerns about Fed independence, right? And we've gotten these developments with President Trump's nominee for the Fed's Board of Governors, Stephen Miran, pushing back against Democratic concerns that he would do Trump's bidding at the central bank. Bloomberg's Mike McKee has the latest from Miran's confirmation hearing in Washington.
The potential new Fed governor has a mostly traditional economic background, a PhD in the subject, experience at Treasury and the White House. But Stephen Miran is not a conventional candidate for the job. He would come to the Fed as a full-throated supporter of President Trump's economic policies, especially tariffs. Miran told the Senate Banking Committee he would leave those views at the White House.
I couldn't be more in agreement that independence of the central bank is of paramount importance for the economy, for financial markets, for the long-run stewardship of the country.
But Senate Democrats weren't buying it, noting that Miran has proposed significant reforms to the Fed that would give the president more control over monetary policy.
So let me ask you the question for the third time. We want to understand your independence. Donald Trump stated that the BLS faked the job numbers before the election to try and boost Kamala's chances of victory. Do you agree with that, yes or no?
The Bureau of Labor Statistics did not take corrective action to improve the quality of steadily deteriorating
Do you agree
data.
with the statement that they faked numbers?
Miran also raised hackles when he told the committee he would not quit his job at the Council of Economic Advisors, simply take an unpaid leave of absence and return to the CEA when his Fed term is up. That would be the definition of a revolving door, as he would still be an employee of Donald Trump while making monetary policy decisions supposedly independently.
Your independence has already been seriously compromised by your statement. You are going to be technically an employee of the President of the United States, but an independent member of the board of the Federal Reserve? That's ridiculous.
In the end, Miran was singed but not burned. Republicans have a 2-vote majority on the Banking Committee, and Miran's nomination is expected to be approved and sent to the Senate floor, perhaps as early as next week. Michael McKee, Bloomberg, Capitol Hill.
All right, Bloomberg's Mike McKee there reporting on Stephen Miran's confirmation hearing for the Fed's Board of Governors. And we also spoke with former Fed Vice Chair Lael Brainard on her concerns about what Miran's nomination could mean for the Fed's independence and credibility.
The idea that the Council of Economic Advisors, Stephen Miran, would go over to the Federal Reserve as a governor and remain on the payroll of the president of the White House, that's unprecedented. And of course, he said many times that he vowed to be an independent voice. But I think the members of the committee correctly really pressed him on how could he be an independent voice if he's still working for the president and may, in fact, go back to his old job in several months' time. So that was a very important piece of information. Of course, it comes in the context where the White House is mounting an unprecedented attack on the independence of the Federal Reserve more broadly, summarily firing a member of the board, pressuring the chair. So that was a very important hearing today.
Well, I'd love to just explore this a little bit with you, because the idea that he's going to still effectively be a White House employee in a political position, even though he will not be taking his pay. He was asked about this a couple of times, and Stephen Miran said that that was the advice of legal counsel. When asked if he would simply resign on his own, he didn't really answer that question. So it looks like this is happening, Lael Brainard, and if he is in fact confirmed, what will that arrangement mean for the Fed? We won't trust anything he says?
It's a really important unprecedented arrangement. We just haven't seen this. And of course, why does it matter that the Federal Reserve takes decisions based on analysis in a way that is independent of the White House? Because when the Federal Reserve is not independent, as we saw in the 1970s, inflation goes up and long-term interest rates go up, mortgages become more expensive. So it's very much in the interest of American consumers and the American economy to make sure that those members of the Federal Reserve can make their independent assessments. If you're on the payroll of the White House, it's really hard to see how you do that.
Would you not trust his word if he stayed?
Well, I think the question is whether, more broadly, the credibility of the Fed as an inflation-fighting institution would be really at stake here. And the question is, do the broader markets view the Fed as compromised?
We've seen snippets of that in the markets, but not a full-out panic just yet that we've seen in certain other iterations. Donald Trump used the word getting a majority on the Federal Reserve in a cabinet meeting. Walk us through just what the impact of that kind of framing has on the institution.
Well, of course, the Federal Reserve Board has 7 members, and so it requires 4 members to get a majority. And those votes that are taken on monetary policy help to determine interest rates. Of course, he said very clearly he'd like to see lower interest rates. Loads of presidents want to see lower interest rates, but getting a majority gets him in a position to affect that. And one of the things that I think has never been at issue before is that all of the other members of the Monetary Policy Setting Committee, all of the Reserve Bank presidents, are up for reappointment in February. And so having a majority on the board could actually affect the composition of the broader Monetary Policy Setting Committee. That would be another really serious threat to the independence.
Former Fed Vice Chair Lael Brainard speaking with our colleagues Kriti Gupta and Joe Matthew. And Bloomberg has learned that the U.S. Justice Department has opened a criminal investigation into whether Federal Reserve Governor Lisa Cook committed mortgage fraud. Sources say federal prosecutors have issued subpoenas seeking information related to the allegations. Last month, Trump moved to fire Cook before she sued the administration to stay on the job and maintain she never committed mortgage fraud. More ahead on the Asia trade. This is Bloomberg.
Get you across some breaking news. OpenAI says it's about to start mass output of its own chips with Broadcom. And it's interesting because in Broadcom's third quarter results, we did hear the company referring to a mystery new customer that was going to place a substantial order for chips. Putting two and two together, it appears that that new customer is OpenAI. So the customer, OpenAI, committing to $10 billion worth of orders. Broadcom doesn't talk about its customers, but people familiar with the matter have confirmed that OpenAI is the new client. So OpenAI to start mass output of its own AI chips with Broadcom. Avril.
Yeah, this would be a win for Broadcom, and we'll be watching some of its suppliers in the region as trading begins. But we are also keeping tabs on some of these Chinese tech names, which, of course, have been driving the rally, not just in Hong Kong, also a bit on the mainland. We did get Bloomberg reporting, speaking to people familiar with the matter, which suggested that China is planning to clamp down on speculation in the stock market. And it is interesting because these comments that seem to be coming in, they actually come in while margin financing is at levels that were similar to the 2015 crackdown. For perspective, let's bring in Charu Chanana. She's Chief Investment Strategist at Saxo. So Charu, you are of the view that it makes sense for the Chinese authorities to kind of curb the speculative parts of the market at the moment.
Yeah, hi Avril. Thank you for having me back. Yes, I think it really comes from given what the situation is right now in China. One, we're coming back off some of the major events, and just after that, they don't want to see the stock markets really deflating very quickly from here. And just the fact that the chat that we had earlier about the fact that the rally in China is still pretty narrow, is still quite speculative. It has not been fully backed by an earnings story right now. Right? There is a lot of focus on how China is really moving away from being the factory of the world to really focus on technological innovation, both to drive its growth, but also to close the gap with the US in terms of self-sufficiency in chips and AI technology and things like that. But certainly that path takes time, right? So there's been a lot of speculation around which names can deliver. I mean, we did see Alibaba delivering big in this earnings season in terms of that chip that they came out with to really, again, close the gap with the US. But to get a broader rally in place, they need the time. And during that time, consumers are not in good shape still. The property sector hasn't still recovered from its mess. So they need to continue to make sure that the rally is slower and really backed by real money so that it kind of continues till the other elements of the economy kind of start to join in and other elements of the stock market kind of start to join in as well.
Charu, what's also interesting is, I mean, you talk about how maybe it makes sense that this is coming at a time like this, following major events in China. We've seen, though, that in past years recently, they didn't seem that perturbed about what they were seeing in the optics in the stock market. Do you think there is a change of heart among policymakers now that the optics there do matter?
Certainly, the external environment now is very different, right? With the kind of geopolitics that we are facing, I think it has become very, very important for China to deliver growth. We know, I mean, their target is still around 5%, but to deliver that, the drivers have not been the same. And export has been a key driver. That doesn't seem to be in place right now. Property has been a key driver. That doesn't seem to be recovering right now. The consumer, again, they've tried several measures, but, you know, nothing has really given them the kind of recovery that they would have wanted to see. So now technology is really the space that they want to see recovering. But like I said, the technology cycles are a little bit longer and it takes time for the earnings story to really kind of play out. And given the kind of environment they're facing from the US, from Trump, I think this is really different from what we've seen during the last few years, whether it was related to, you know, internal Chinese events or just the whole global scale. I think that matters a lot more at this point.
Charu, are there any parts of China's market that look overheated to you at the moment?
So I think, like I said, the recovery, the rally has been quite narrow and it has been quite limited to some of the tech plays, but also some of the other areas that are related to tech. For example, you know, the chip manufacturers, but also the where you could see the adoption. So, you know, healthcare technology has also been quite, I think, bullish. So I think that those are stories where speculation could be curbed out. There's room for a correction there because that has certainly run ahead of earnings. There are other parts of the story that have done well, which is related to the state-owned banks and the dividend plays particularly. I think that is where the speculative part is relatively lower, and that is a story that can still continue to run even during these kinds of measures.
How do you see US tech export curbs impacting China's development of AI? I mean, there's an argument that would obviously slow things down, but then again, could it potentially prompt a lot more innovation and more deep-seek moments? Where do you see this story heading?
I mean, on the contrary, yes, I do think they actually, the more the repression from the US, the greater the you know, drive for China to innovate and to be self-sufficient in chips. I think Alibaba's example is another deep-seek moment in itself. The fact that they could come out with chips that are compatible with Nvidia's clearly shows that the intent was to be able to replace those Nvidia chips. And just the whole fabrication and everything, the background of those chips being prepared by Chinese manufacturers again shows that the intent is that they don't want to remain dependent on global supply chains, whether it is the US or also even, you know, for example, the TSMCs. So they completely are looking at a hardware autonomy, a software competitiveness to the rest of the world. So I think the more the repression they face from the US, the drive to innovate just gets bigger and bigger.
I'm just looking at dollar China. We were at 720 a couple of weeks ago, and now we're at 713. You're looking at the yuan and that coming along with this firmness in the stock market. Is this a virtuous feedback loop you're seeing?
Yeah, absolutely. I think two factors that I would really highlight here. One, there is a slight pickup in foreign interest in the Chinese stock markets as well. So that kind of lends some support to the yuan. But of course, we know yuan is a very managed currency, and we've seen that with the daily fixings as well, that the intent has been to stabilize or even to strengthen the currency. And that gives me another message that China is really moving away from that focus on export, you know, and again, trying to bring up the consumer, trying to drive the domestic market a lot more. So for that, they need a stability of the yuan, rather a strengthening of the yuan as well. And I think what better time to do for it when, you know, the US dollar is facing questions around not just the levels, but also around just its safe haven status as well.
Just very quickly before we have to let you go, these potential stock market curbs. What do you think would be the most effective way for policymakers to roll them out? We're seeing maybe, something related to short selling that might be a path of action.
I think certainly letting the market be a little bit more free certainly helps the market to function more, in a better way. So we know there's been curbs on the short selling side. So there's not been a two-way flow in the Chinese market. If they just allow that two-way flow, I think that could go a long way in not just a short-term curbing the speculation, but over the long term also repairing the health of the markets and making sure the foreign investor kind of keeps coming back in, because the main reason foreign investors stay away is the risk of regulation and risk of this upper hand in the Chinese market as well.
Charu, always fantastic. Thank you so much for your insights. Charu Chanana, Chief Investment Strategist at Saxo. We'll have more ahead on the Asia trade. This is Bloomberg.
Take a look at how commodities are tracking. You might ask, what has iron ore got to do with the military parade? Well, steel mill production around Beijing was curbed during that event to improve air quality. Those curbs are now lifted, so we're seeing a little bit of support for the iron ore price, still hovering around that $104 per tonne mark. A lot of focus on gold, of course, continuing to hover around record highs, and oil also about to have a pivotal moment. It's the OPEC Plus meeting this weekend. There is no agenda, according to delegates, so we shall have to wait and see what comes out of that. In the meantime, US crude inventories rose unexpectedly by 2.4 million barrels in August. Avril.
Yeah, so for more on the outlook for oil markets, let's bring in Bloomberg oil reporter Nicholas Loa. So, Nick, what are they going to do this weekend, OPEC Plus?
Well, OPEC's keeping its cards very close to its chest, and so there have been news reports that supply is going to be increased again. We've already had 2.5 million barrels brought back, and people are concerned that we're going to a situation of a glut already, and then there's going to be even more supply. So the market's on tenterhooks. But again, Bloomberg's own reporting is suggesting that all options remain on the table. It's not necessary that the hike will be guaranteed. It's very possible that things will hold steady. We've already heard from the Russian DPM saying that there is no agenda going to this weekend.
Nicholas, how about the demand picture? Are there any changes to the dynamics on that side of the equation?
Yeah, I would say that the demand picture remains not very optimistic. Again, like the U.S. trade data is suggesting a bit of a slowdown. And again, I think more importantly, we need to point at how there's just so much supply, right? Don't forget that the trade war is bringing in a lot of uncertainty. And on top of that, as OPEC tries to fight for market share, that's not the only supply problem that's around. There's also going to be supply from non-US suppliers. There's also going to be supply that are not from OPEC. So I think we have a less than optimistic picture heading into the fourth quarter.
Aside from the demand picture, we've also been seeing receding spare capacity. How vulnerable does that make the markets to upward price shocks?
Yeah, I think that's a really good point, Avril, to bring up, because once that extra spare capacity is around, then as a result, anything that pulls us in a different direction will lead to some volatility spiking. You've probably read in our news already, people are pointing at how a lot of algo trading is responding to sort of these short-term sort of volatility moves. So I think that's one thing that could lead to even more surprises down the line.
All right, Nicholas, thanks so much for setting us up for what could be a very interesting weekend. Bloomberg oil reporter Nicholas Loa. Here are some of the stocks to watch when markets open in Hong Kong, Taiwan, and mainland China. We got Broadcom suppliers in focus after OpenAI announced it will start mass output of its AI chips with a firm. This comes after Broadcom CEO Hock Tan told investors that the chip maker's AI outlook will improve significantly in fiscal 2026. Paul?
Let's take a look at how futures are tracking as we look ahead to the open in China and Taiwan as well. It's about a minute 30. Oh, sorry, beg your pardon. Bottom of the hour we're looking at here. We've got Taiwan futures currently pointed higher, and there is a little bit of optimism around the tech space this morning, as Averill mentioned. A couple of factors here. First off, Broadcom announcing that it had some pretty good results in the third quarter, but it also appears it has that powerful new customer in the form of OpenAI chip orders there of $10 billion. The market really liked that. President Trump, we also heard from earlier as well, congratulating any chip maker that's setting up for business in the US, but threatening tariffs against those who do not. But overall, pretty much a risk on sentiment for tech stocks in the Asia Pacific today. We got S&P futures, meanwhile, pointing higher as well after the market hit another record during the US session. Averill.
Yeah, what also seemed to be catching a bid in the Japanese session are these automakers, right? Following on from Trump signing that executive order to implement the trade agreement with Japan. So a sense of relief going up among these automakers because this prevents the stacking that we could see sectorally speaking. Of course, Akazawa, the chief trade negotiator for Japan, is in the U.S. and we have heard that there could be $550 billion in terms of investments, loans, loan guarantees. We continue to watch out for details of what's been ironed out between the U.S. and Japan. And aside from that, watching the data out of Japan as well. Today, we got those wage gains, highest, I think, in 7 months, boosting the case for BOJ rate hikes. But if you look at what we're seeing in JGBs that tick up, maybe because it's being offset by the trade backdrop. That's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China show is next. This is Bloomberg.